Hey, everybody, and welcome back to another episode of Disrupt Your Now. And because of my guest last week, he forced me to remember to promote my own books. So, Boomer Cash Out for people who want to increase the value and marketability of their business to sell for retirement, and Disrupt Your Now for entrepreneurs who are looking to shake things up, which is what this show is all about. So, our guest tonight is my good friend Pam Prior. Hey, Pam.
Hey, Lisa.
Pam, Pam is the author of My First CFO, and she has been a CFO for what, 20 years? And
Mhm.
now she owns her own business and she is a fractional CFO for entrepreneurs. So, Pam, welcome to the show. And I want you to fill us in on your background, and then we'll go from there.
Well, first of all, thank you so much for having me. I love what you do on this podcast. It's
Oh,
amazing. And it really is about disrupting our now every single day. That's why I was really intrigued with the title. And I'm so glad our paths crossed and that we're great friends now.
oh.
So thank you for having me. My background really, I was in corporate for 30 years.
Mhm.
So for 20 of that, I was in Fortune 50 companies, growing up from accountant to controller. And then for the next 10, I was out in the mid-market world, kind of the 300 million to 500 million world in two main companies as a CFO. And
Uh-huh.
in between a little bit of that, I was working with entrepreneurs. And I always thought of it, Lisa, as like this will fill in the gap until I get my next
Mhm.
real job. Because I was a
Yeah.
corporate kid. I mean, I started in the mailroom and I grew up to controller and I went to
Wow.
school at night. That was back in the days when, DuPont paid for my entire education.
Mhm.
Um, so I got both my degrees and my CPA all covered by other people, which was amazing. It
Awesome.
used to happen. But I loved corporate. I loved everything about it. I loved the office. I loved leadership. I worked for some really fabulous leaders. So I learned that the how was as important as the what. And I was able to
Mhm.
pass that along then in my CFO role. So all of a sudden, at one point, when I moved, it was getting ready to move in my third CFO job after I was in for 6 years. We sold the business. And I was working with some entrepreneurs in between again till I got my real job.
Mhm.
Started that next real job, which on paper, Lisa, was perfect. It
Yeah.
was a CFO in a slightly troubled company, had a mess to clean up. I gelled with the people, all the things. I got in there, and literally a week after I was there, I went, I don't want to do this anymore. I
Oh,
loved it for 30 years.
yeah.
I realized that when I was working with those entrepreneurs in between the real jobs,
Yeah.
I loved it. It was a whole different kind of fire, like a whole
Mhm.
different kind of fire. But then it clicked to me that I had all this great stuff that I'd learned in corporate, and that all these entrepreneurs, nobody was really getting served well by finance. They had bookkeepers that held them hostage. They had tax accountants that talked a different language,
Yeah.
and they didn't have any way to, like, numbers became this thing everybody avoided in their
Mhm.
businesses as entrepreneurs because everybody made them feel stupid about it. Truth be told, nothing's ever talked about even balancing your own personal checkbook
Yeah.
through high school, through college, or any of it. So I
Mhm.
knew I had a place where I could make a difference, where I could take all these really cool things and support that the big companies got and make sure that small entrepreneurs got that same benefit, but without the bureaucracy, without the
I
politics,
love that.
and really lining it up to their energy. And I've been doing that now for 5 years, and I could not be happier. I could never go back. This is a dream.
I didn't realize. So you and I met not long after you started doing it. Well,
Right?
we've known each other, I think 3 or 4 years. I can't
4
remember.
years, yeah. So
That's
it was
so
1 year I
cool.
was 1 year in when we met, I think. Yep.
Yeah. Well, and the thing that I love about what you do, in addition to that, I love you and your awesome personality, is that, as you said, so few small business owners actually get to work with somebody who has that in the ditches, in the trenches experience.
We
Because,
call it the finance friend in the foxhole. You need
yeah,
somebody
yeah.
who has your back. You don't need to learn bookkeeping, you don't need to learn accounting, you need to know that somebody's got your back on those things.
Yeah, and the thing is, like most bookkeepers, they might be really good, but they're just kind of rote doing it.
Yeah.
Most, and then most CPAs, they don't want you to understand really because they just want to do it and get it over with. And I don't mean
Yeah.
that to be mean. I used to be a CPA. It's just that they just want to do it and get it over with. And one thing that I was really surprised at when we were in New York at the last speakeasy, I was really surprised when you said the majority of small business owners don't want to look at their financials. They do.
No,
And I was like, wow, I thought it was just me, even though I
no.
used to be an accountant. I'm like, nah. So
Yeah,
I
I
was really
can't
surprised.
scientifically support this, but my calculations from the thousands that I've talked to it, when I've been on stages or my clients or prospects or meetings, that kind of thing, is that about 75% of
Yeah.
entrepreneurs have some massive snag between them and their finances, be it,
Yeah.
it's avoidance, it's fear, it's they don't have time for it, it's overwhelm.
Hmm.
Those are the four big ones. And it really is a matter of just helping them understand it's not that big a step to get past those things that feel like these mile high barriers to them.
Yeah. Well, before we go further, I want to show you Adam, our buddy Adam Reamer
Adam,
Brown.
oh
Hey,
gosh,
Adam.
hi.
It's so good to see him. Thanks
Yep.
for joining us, Adam. Um, so I want you, let's start out by talking about what, in addition to avoidance, what are some of the biggest problems besides that? And of course,
Yeah.
that leads to a lot of problems, but what are
Yeah.
some of the biggest problems that you see that entrepreneurs have?
Well, what's interesting is most of the big problems evolve from one of these four things that make us avoid our finances. So
Okay.
the four things, you can remember them with the acronym SOFT, SOFT. There's shame.
Mhm.
And what I tell people about this is, think about your most embarrassing money story. Like, take a minute and think about your most embarrassing money story. And then I'll look around the room and I'll ask, and I'll tell you that everybody listening to this podcast or watching this live, whether now or on replay, you can promise that if I ask, I'm so embarrassed about my finances because fill in the blank, that absolutely every single person can do it.
Yeah.
Right? So there's this shame that you're the only one or that yours is the worst story out there.
Mhm.
Well, one thing I can promise you, yours isn't the worst because there are billions of us with stories. But so kind of that shame of really opening up and admitting that I messed up with my finances sometime, or I think I'm too stupid to understand it. That
Yeah.
shame is one of the biggest things. So really we overcome that. It's a lot of mindset stuff that people grew up with. And that same mindset stuff is what we'll call larger problems in your business, because it leads you to not price right, which erodes your profitability, which erodes your cash flow. And a lot of people will go out of business simply because they can't and don't work past that shame. And there are very, um, you know, not easy, but straightforward exercises to help people walk through that shame and realize, oh, this is a mountain. I mean, this is a molehill, not a mountain.
That's
Um,
cool. So you have specific exercises that you work with
mhm,
your clients through.
yeah,
That's great.
everybody's got a little bit of a different thing, but I've
Mhm.
had some great mentors, trainers, and coaches. Most of them through the line of like Bob Proctor, all around the mindset stuff, and
Yeah.
it's very consistent and it works across the board. So second thing is overwhelm, right?
Mhm.
So say you do decide, okay, I know I need to look at this. Holy cow, I don't know where to start. My CPA speaks Greek and only calls me once a year. My
Yeah.
bookkeeper tells me that these reports are right, but they don't feel right in my gut. I have a box full of receipts. I have a closet full of reports. This is my money, for God's sake. Who do
Yeah.
I trust? It's like you don't know what the first step to take is.
Yeah.
So we go through a whole thing. It's called the SOB method to deal with overwhelm. And it's really about three very easy steps you can take to get your way down and through the overwhelm. And the first is to separate. So make sure that your personal stuff and your business stuff is separate. Have a
Mhm.
separate checking account, have a separate savings account, a bunch of reasons there. But a big one is the psychology of it. Because a lot of times at the beginning, we're supporting our businesses, right?
Yeah.
And there comes a point where we know we want our businesses supporting us. And as long as we have them as two clearly separate entities, we're firmly grounded in the fact that we're doing this thing to build wealth for one reason or another. Even not for profits need to build wealth because they need to continue to serve their not for profit mission, right?
Mhm.
So, and the second, S is separate. Get it separate. Just open another bank account. Even if you don't create an entity for your company, just open a second personal bank account. Run all your
Mhm.
business income and expenses through there. And if you need to put money in because it can't afford to do it itself, you put the money in.
Yeah.
So take care of that. Done. Second is organize. Get a bookkeeping system. It's so easy to do. They're free or cheap right now. And
Mm-hmm.
all of a sudden, two things happen. Overwhelm goes away because the system does all the recording of those transactions. Happens
Mm-hmm.
automatically. Yeah, you have to go in and do it once or whatever, does all the transactions. And the second is you get rid of all your receipts. All of a sudden you scan them in, they match up, you're done. And at the end of the year, when it comes time to do taxes, instead of thinking, oh my God, I have to go through all these receipts, separate the personal from the business. I've done it. I know. I have to do
Yeah,
it
me
in a
too.
spreadsheet. He doesn't do Excel, so I have to put it on Google, all that stuff. Instead, you literally just give your accountant access to your business and they create your tax return just like
Uh-huh.
that. So for your own peace of mind, getting that bookkeeping system is great. Absolutely. If you're not into bookkeeping, get a bookkeeper. You
Yeah.
can find really good ones out there. And they just do it every month. If you're not into it, you're going to procrastinate, kind of like I do with the things I don't love to do.
Uh-huh.
And it's going to pile up on you. You're going to be in exactly the same place. So just organize that stuff. So right
Yeah.
out of the gate, we've separated, we've organized. That's 90% of the overwhelm out of the way. The
Mm-hmm.
last piece is just a new thing that I think makes a difference for every business owner, and nobody really does it. And that's to build out the model of your business. Draw it on paper. What do you bring into your house to mix with your magic sauce to create your product that you put out the other door?
Okay.
And then how does the cash flow from your customer to you, to the people you pay, and what's left over? And we
Mhm.
draw it in a picture. And all of a sudden, when you see that the money follows the process, you start to connect the dots that all your finances is your storyteller. It's
I
just
love that.
telling the story of your business in a way you understand it, but not if you just have a bookkeeper setting it up so that a tax accountant can file your taxes.
Uh-huh.
There's some things you can do, like you can insist on calling things whatever you want to call them. So
Mhm.
here's an example. I had a client once who said, I'm rambling here. I don't know if you
No,
want
no, I love it. No, this is
to get
great.
so excited about this. Like, blah, blah.
Yeah,
Um,
and that's why I don't ask specific questions. I
I
like
love
to
it.
just go where it goes.
Yeah, but I mean, can I cuss on your show or is it
Hell
better not?
yeah.
Okay. So I had a client once who we reserved an amount on her balance sheet. I wish I had something to match it with. We reserved always had a line on her P&L, and it was basically the accountant insisted on calling it miscellaneous.
Uh-huh.
And she's like, I hate that word. And I said, why does he have to call it this? Because we told me it has to be like that in case a bank ever looks at our books. I said, well, here's a little secret for you. I said, well, what do you think of it as? She goes, shit, I can spend however I want. So I said, so it's like your shit pool. She said,
Mhm.
yes. I said, guess what? We went into her books. We changed the line of that to her shit pool.
I love it.
She's like, oh, now I know what that is. And I know it's not junk. I know it's something we're intending to put there. And
Uh-huh.
if we ever need to send anything to the bank, I go in, I change it back to
Yeah.
miscellaneous. I print the report. I go back in, I change it back to shit pool. She's like, wow, you can do that? I'm like, yeah, you want this to feel right to you.
Yeah.
So that's what that's about. And that gets in the way of people at the end. So if you get overwhelmed, you were kind of asking what are the other problems?
Uh-huh.
The other problems come from these four because then you get things backed up. You're not looking at what's happening. And a lot of times the biggest thing that can happen from that, Lisa, and it just petrifies me for entrepreneurs who haven't been exposed to this,
Mhm.
is you can have a great business and you can see growth and you can have all the revenue coming in and you can grow so fast that you go bankrupt. I call it
Yes.
going into bankruptcy. So if you're so overwhelmed by the finances that you don't do these few easy things, SOB, separate, organize, and build your business model, then you might grow so fast that you're paying your vendors faster than your customers are paying you. You run out of cash, and I have helped more than one entrepreneur go through a bankruptcy as a result of this.
Wow.
So that's a big thing, and you don't want to be one of those. And it's an easy step to take, just those couple little things. The third thing is the F, which is fear, right?
Yeah.
And cut through to what fear is. Fear is of the unknown. We don't know
Mhm.
what's on the other side of that door. 9 times out of 10, once we open that door, the tiger we thought was out there turns out to be a pussycat. But even if it doesn't, even if it's a tiger, even if like the worst thing in the world is happening to you and your finances, like the sample clients I had where there was bankruptcy,
Mhm.
once you open the door, it's not fear anymore. Then the adrenaline's going. Then
Yeah.
it's okay, fight or flight. I got to deal with this thing.
Uh-huh.
So instead of wasting all that energy on fearing what's there and getting nowhere, we open the door, say, that's what's coming. And we do that with a forecast.
Yeah.
And there's a couple very easy ways to do quick forecasts that every entrepreneur can do that takes 15 minutes a week. And it's fantastic. So, with just that 15 minutes a week, instead of finding out on what's today, Tuesday, instead of finding out on Wednesday, oh my God, my bank balance just went upside down, I've done an overdraft. We can look ahead 12 weeks and go, oh crap, if I don't do something in week 5, I'm going to run out of money in week 12.
Yeah.
And so that forecast is kind of our line of sight. I see the forecast as the key to the door, right? It lets you see what's coming, then we can react to it. So that's the
Yeah.
other thing. So again, that fear, what does it lead to down the road? It leads to surprises. And
Yeah.
getting rid of fear gets rid of the bad surprises. And then finally, time. And this one, it's so the fault of my profession that it infuriates me. Our profession. You're a
Mhm.
fellow CPA.
Well,
It's
used to be, not anymore. I haven't been in 30 years.
cool.
So,
Well, so bookkeepers, accountants, like historically, they just hand an entrepreneur a piece of paper, say, here's your profit and loss, here's your balance sheet.
yeah.
And I keep saying 9 times out of 10, terrible expression. I've got to stop using it. But a lot of times an entrepreneur will look at that and go, that doesn't make any sense to me, because they think of their business differently than that. They think of it in different groupings or components or names. And I've
Yeah.
created this beautiful accountant's profit and loss statement and balance sheet. And they're like, this isn't my business, right?
Mhm.
So 2 things take care of that. Well, one thing, context. That's my puppy.
I
Yipping,
love it.
yipping to get out. I may have to go let
Oh,
him out.
no, let him
Otherwise,
out. That's fine. I
okay.
love
Otherwise,
doggies.
we may put
Yeah.
up with this for a little while. All right, I'm gonna go off camera here for a minute, and I'll be right back.
Sure. Okay. Yeah. I want to see him. I was going to say, while Pam is gone, she is so right about fear and avoiding, and we spend so much time avoiding the things that we're afraid of that we waste all this energy, and we spend weeks or months or sometimes even years just avoiding the things that we're afraid of. And then when we finally do deal with it, we're like, that wasn't that big of a deal. Why did I do that? And it's just that fear just feeds it. Time feeds the fear, I believe. The other thing that I love, oh shoot, I almost pulled my earbuds out. Sorry, y'all. Um, the other thing that I love that Pam said about the shit pool, that goes along with what I always tell people: it's your business and you can make it anything you want. So call it whatever you want it to, whatever you want to call it, but also not just your finances and calling that whatever you want to call it, the products that you create, the things that you do. Stop looking at everybody else around you and just mimicking them and doing what they want to do. I forgot to add you back.
No, that's awesome. You were doing great. That's
Oh,
exactly right.
well, I
That,
saw you and I forgot you couldn't add yourself back. But it's your business and you
yes.
can make it anything you want. So whether it's the words on the P&L and the balance sheet or whatever, or the services and products that you provide, and
How
the
things
type,
are classified, how you
right.
group them.
Hmm.
Like I was talking to a client today, just today, and I said, there's a report we call the minimum monthly spend report, which shows him, if I make this much revenue, I know I'm going to have to spend this much money every month. Here's what's left.
Okay.
And he said to me, gosh, can I tell you how I think about this? And I said, absolutely. He goes, well, it might be wrong. I said, no, it's not going to be wrong. It's going to be how
Yeah.
you think about your business. And he told me, I said, oh, yeah, I can tweak this and this. And next, I'm going to give you version 2 of the report that's going to look exactly like that. And
Mhm.
he said, well, will it still be right? I said, absolutely. I said, because we're just changing how something's categorized. We're
Yeah.
not public companies filing SEC reporting.
Hmm.
We are a private company owned by you who understands your business, and I want to make your numbers line up to that. Sure, we want to make sure that you're not doing anything that's misleading you
Yeah.
in making decisions, and I'll make sure of that. But we can move that wherever you want it. And all of a sudden he goes, now it makes sense. He goes, are you
Yeah.
sure this is okay? I said, yeah, it's okay. CPAs and accountants and bookkeepers were generally trained that it's got to be A, B, C, D, E.
Yes.
It's just not true. I swear my mission is to make every entrepreneur I meet go, wow, I now have and understand that these numbers are the story of the business. And that if I if I take command of them, and it doesn't mean learning bookkeeping or accounting, it
Right.
means knowing these few facts that you have
Uh-huh.
control over and setting up whoever's doing this for you to do it the right way, then this becomes the most meaningful decision maker, not only in my business, but in my personal life, because I'm running this business to add to my wealth.
Yeah.
So that's
I
that. And
love that.
yeah, the context, basically what that means is, and this is a tip for anybody listening, if you currently get reports from a bookkeeper, tell them that you never want to get a report that only has one column on the page. You always want to see at least the last 12 months
Mhm.
in the individual columns. Because guess what? When you have that, you can look at something everybody calls trends. I
Trends,
call
yeah.
the story. You can
Uh-huh.
look and see where your numbers go up and down and start to see how they're related to each other. If I increase marketing, wow, look what happens to my sales 2 months later. If
Mhm.
I hire somebody, look what happens to, my IT cost. If I, those kind of things. So, um, you get to allow your numbers to be your storyteller is what my really true belief is, and then the comfort level that comes with that is just amazing.
You're so right. And the thing about looking at 12 months or whatever period of time, a longer period of time, a lot of times when things feel like they're not going well in the short run, if you look at the big picture, you might feel like you're in a trough. You look at the big
Right.
picture and you realize you're way up higher than you were. You're just
Yeah.
down a little bit from
Yeah.
the higher point before. And it really helps put things in perspective. It's kind of like people who are watching their weight. Don't worry about
Yes.
it every week. Look at the trend.
Yeah, it's like investing in the stock market, right? Do not
Mhm.
look at the stock market every day. You'll
Yeah,
lose your you'll lose your mind.
lose your mind.
Yeah, but I mean, you make a really good point. So the other thing that it does for you is, like, if all of a sudden you see I'm losing money every month, you might not actually be losing money. You might actually be making a choice to spend more money right now on purpose, because 3 months down the road, you're expecting something to increase. Like right now, I'm spending very heavily on a funnel and some marketing stuff for smaller entrepreneurs. Well, I know I'm going to be not profitable in these 3 months leading
Yeah,
up to that. But now I know that when this month starts and this month start, I should see the return on that. And it tells the story, and it makes you go, yep, what my gut's telling me is right, because this is
yeah.
speaking my language now. And it's so important. It's such I call we have, like, I call it the 67% CEO, because we've got these three elements of our business, and we really like operations because that's our special sauce, right?
Mhm,
So we know this is what we know how to do. This is how we serve our client. So we spend a third of our time there happily.
mhm.
And marketing's kind of fun and sexy, right? So we spend time there. We know we
Yeah.
have to, and we spend time there. But this finance thing, we just kind of leave off in the distance, and it's like that last third.
Everybody's like this, "Ah!" Like it's a
Yeah.
vampire.
And it's the fuel. It's the thing that you can use to make everything else work
Mhm.
so
Yeah,
much better. And 9 times out of 10, what we find are 9 times, there I am again. 7 times out of 8, you find out that you've got a lot more to play with than you thought.
yeah. I love all of that. And so explain to people in the audience what a fractional CFO is, because I think most
Sure.
people don't understand that.
I hate that term, but it is the term everybody knows.
Yeah, it's the
Um,
term. So,
it sounds like I only care partially, right? I'm a fractional CFO, you get a fraction of me. And that's out of old corporate America, so
yeah,
I'm pushing to change that terminology to
yeah.
eCFO or virtual CFO.
Mhm,
But essentially what it means is, in my particular case, for each of my clients, either I, depending on their size and their package, either I or one of my staff is their CFO.
mhm.
And for all intents and purposes, it's exactly as much CFO as they need.
Yes.
So the way we work this, actually, we're modifying a little bit based on Steve Sims' last speakeasy,
Okay.
because essentially what we're switching to is you you get this package. So we meet with you X number of times a month to review your financials, strategize, but all throughout the month we're available to handle all of the things that surround finance for you.
Mhm,
We talk with your insurance broker, your bankers, whoever we need to at the time. If you're getting ready to buy a company, we do the due diligence. If you're getting ready to sell a portion of your company, we help work with your investment banker to really get the value of your business up higher, kind of certified exit planning.
mhm.
Um, we do anything that a CFO would do in corporate America, you get as an entrepreneur. But because you're smaller, you don't need 24/7. You
Right.
need something less. So you also get, though, email access as if I'm on your team.
Mhm.
And you also get, now we're going to be changing to essentially anytime you want to Voxer.
Yeah. Yeah. I
As
love
well.
Voxer.
And that
Yeah.
was the speakeasy tip that they gave, and it really does work. No matter how many clients you have, it works.
Mhm.
So that's how we work with the clients, and they feel like they have a whole CFO, but it's really only a fraction of,
Right.
because we're only there kind of like, I may work on a particular client one week, I may spend an hour working on their stuff.
Mhm.
And another week I may spend 40
Yeah.
working on their stuff.
Yeah.
And it's so it ebbs and flows to the need. And
Mhm.
we, of course, structure our internal operation to maximize how much coverage we can get for people.
Yeah. And they do have a whole CFO because they have what they
They
need.
need. To
They don't
them, I said, if
need.
you ever feel like you don't have a CFO,
Mhm.
when you need them, how you need them, and in a timely fashion, then we're not doing our job right.
Yeah. Yeah. I love that though, because it enables business owners to have the level of expertise and knowledge that
They
they
deserve
need,
it. They
that
deserve
they used to not be able to have
it.
unless they hired somebody full time. And then typically if they hire somebody full time, it's not somebody with the expertise and knowledge that you
Right.
have. It's usually more like a bookkeeper type, that's just got a
It
lot
can
of.
happen, yeah. And
Mhm.
the other thing that happens is some, CFOs that come out of corporate. I mean, this is why I hate the term fractional CFO, because I frankly picture an old white guy with glasses and saying, no,
Mhm.
you still need to use this desktop green screen to do your
Yeah.
accounting. And,
Mhm.
frankly, there are a lot of fractional CFOs that kind of just bowl in with judgment and say, like,
Yeah.
well, you're doing this all wrong and you have to fix this. I've gotten so many calls from people who literally in the first 5 minutes of the call go, oh my God, you're listening to me.
Aw.
I'm like, well, yeah. He goes, well, this last guy came in, he looked at my books and he told me everything I was doing wrong.
Uh,
And
and you don't need that. Okay, yeah, you
no,
need to know if you're doing something wrong, but you don't need to be judged and attacked. All you need is to be pointed in the right direction and to be
right.
treated with respect.
Told what you need to
Mhm.
know to look out for. And, all of us are making business decisions day to day based on the best information we have. Yeah,
Mhm.
I'm making stupid decisions to a brilliant marketer for
Yeah.
sure. But
Yeah,
I don't want somebody to come in and say, "Well, that was stupid." I'd rather have them come in
exactly.
and say, "Hey, we can up your game by maybe trying boom, boom, boom."
Uh-huh.
And that small tweak, just I'm thinking of one of the things I'm going to do is set up a school for exiting CFOs from corporate and certify them to be able
Oh,
to
I
talk
l
to humans.
oh my
You know,
god, that would be great.
if you don't come through this certification, you're never allowed to talk to a human entrepreneur again.
I love that because yeah, I mean, it's a totally different world. If you're working in corporate and you're
It
dealing with
is.
boards and all that, and then you're trying to talk with an entrepreneur and you didn't even come from an entrepreneurial background, so they don't understand all the emotions
Right.
and all that
And
involved in it.
it also fills the other thing, right? Because a lot of entrepreneurs are dealing with VCs and their boards, or they're dealing with wanting to exit the business. And at
Mhm.
that point, I do bring my big girl game because I've
Yeah,
been on the other side of the table and I say, okay, here's how we have to package this up now. Because
yeah.
now we're not just planning our house. Now we're
Mhm.
dressing up our house for the outside. So these are the words we're going to use. These are the, decks we're going to put together. These are the terms we're going to use.
Yeah,
And, um, so we can turn it on when we need to
yeah.
if it benefits the owner. But
Right.
just for the sake of formalizing inside a company that's always going to stay family owned and that's what they
Mhm.
want,
Yeah.
why?
Well,
Why?
and speaking of getting a company ready to sell, the way that I um, try to get people to understand the importance of some of the things is just by talking about selling a home. You live in your home, you have all your personal stuff all over the
I love
walls.
that.
You can paint your walls whatever color you want, but when you're getting ready to put it on the market, you need to get rid of a lot of the personal stuff, have neutral colors. You
Hmm.
may invest in kitchen and bathroom because those are the two things that make it worth
Oh, are they
more.
okay? Cool.
Yeah, those are the two things that, like a swimming pool, people like a
Oh,
swimming pool, but
wow.
Yeah, they like a swimming pool, but they don't want to pay more for a swimming pool.
Got it. That makes
Um,
sense.
yeah,
Yep.
I mean, it's a great feature, but upgrading a kitchen and a bathroom will actually add value to a home, and the curb appeal thing. So it's the same thing with the business. Okay, you've been running it like you've been running it, but now you have to take a step back and go, if I were going to be buying it, what would I want? And you have to make your business something that other people can see themselves in, just like somebody can see themselves in a home.
Yeah,
Um,
that's exactly right, and you can show them the thing about this that's so cool is you can very clearly say to somebody with the home or with the business, "Hey,
mhm.
we can leave it this way and probably get, $10 million for it.
Right.
If we make these few changes just to the paint, the
Mhm.
all the you can sell it for 50 million." It's like,
Exactly.
"Oh, okay, well, that makes a lot of sense."
Yeah.
And then, and that's the thing about exit, and this is why we talk so much is, you don't plan for exit 6 months before you're ready to exit unless you really need the cash for an emergency or something.
Yeah.
You wanna start if you think there's ever gonna be a point where you sell your business, you want to start thinking about that a good 5 to 7 years before you might get there because there's so many things you can do well ahead of time that take
Mhm.
the value of that business up exponentially, and they're simple little things
Mhm.
that if you can show 3 to 5 years of financials with those things happening, it's like, "Wow, this business runs itself," as
Yeah.
opposed to, "Oh, last minute, let's take the owner out of the salary and put somebody else in." It's like,
Mhm.
that doesn't do the trick. It's just,
Yeah. Too
you know
many
this better than
people.
anybody. You
Yeah,
you wrote
too
the book
many
about
people. Too many people just slash costs, and it's like,
it.
if somebody's buying a business, they're smart enough to look back. They can see through what you're doing, and if somebody's starting a new business, if anybody out there is starting a new business, one of the best things that you can do, even if you think you're never going to sell, is build your business like you think you're going to sell it,
Yeah.
because then it's more marketable if you ever get to that.
Yep.
But even if you don't ever sell it, you've built it in a way that makes it easier to run
It's of more
and more
value to you.
profitable.
It's more
Yes,
profitable to you, and that's
exactly.
yeah.
Because you
Exit is a
definitely,
word, entrepreneurs, I don't know if you found this, but it's like I don't use the word exit
yeah,
with business owners unless they bring it up because
exactly.
they feel like that's like the end game, the failure, and really a
Uh-huh.
business exit is nowhere near an end game,
Yeah. To
you
me, it's the
know?
beginning of the fun, right?
Beginning of the next game,
Yeah,
and,
and that's the thing. A lot of people who sell a business, it's not like they're selling it to go just sit on the beach. And
mhm.
maybe they think they are, but most of them turn. I know a guy who sold a business, a really successful business, sold it for a lot of money. He's like, "Woo! I'm off to the islands. I'm gonna lay it,"
5
And
minutes?
I think it was a month, maybe. And he's like, "I can't do this anymore. I can't lay
Oh,
on the beach
yeah.
anymore. I can't drink cocktails because it's just like you people
There's
with
a
that.
real hangover effect, and
Yeah.
really, really in fact, one of the first entrepreneurs I worked with, I started with her when she was pre-funding, so she had 0 revenue, 0
Wow.
anything, and had a concept, and literally 4 years later, this woman was a titan in my eyes. We built the business, she sold it for $70 million,
Oh my gosh.
and probably 2 months in, depressed as hell
Yeah.
after she sold it. It's like,
Because what do you do?
yeah, I mean, it was fun, it was scary, it was all this adrenaline, the ups and
Mhm.
downs. I mean, there were months we didn't know if we'd make payroll or if we could, I mean, so it's a real thing, that hangover.
Yeah, and most entrepreneurs, they're not just in it for the money. They
Right.
love the adrenaline, like you said, the game,
The
the
mission.
yeah, and for me, I love always being able to learn and do different things, and that's why I've built my business the way that I have, so that I can switch gears quickly. And I love technology, and
Yep.
I like being able to be like, okay, I'm tired of doing this. I mean, I still do the same. To outsiders, it looked like I do the same thing because I've owned a
Yep.
web development and business strategy company for 26 years now,
Mhm.
but my business constantly changes. I cannot imagine not ever working because it's
I'm the
fun.
same way. I'm the
That
same way.
because
It's not work.
That's
It's
right. Yeah.
Yeah, I've always been a little bit not a fan of work-life balance
Uh-huh.
because it's every minute is balanced
Yeah.
in some way to the joy, the happiness, the life that we want to
Mhm.
lead. And um, yeah, I don't distinguish much between work and play.
I don't
And
either.
that's a blessing. And I know it's a blessing. And I'm
Yeah.
very grateful for it every single day. But I wish it on everyone
I
to have
know.
that same feeling.
Yeah. And I want in a minute I want you to talk about some of the simple things that you said that people can you
Awesome.
referred to. I want to talk about that, but I also want to say to people out there who maybe don't have a business yet and you're thinking about starting one, or maybe you've even been laid off and you're like, I can't get a job, I don't know what I'm
Yeah.
going to do, or maybe you've got taken early retirement because you got a golden parachute or whatever. I always tell people you are the only person in the world with the experience, your unique set of experiences that you can offer to the world.
So
So
true.
everybody out there has something that they can offer in a unique way to
Mhm.
other people. So
Yeah.
don't look around at everybody else and go, oh, Pam's doing this, so this is the way I got to do it. Lisa's doing this is the way I got to figure out what is the life that you want and what do you love to do and how can you make a living doing it.
I'm so glad you said that because I'm thinking now, and I fully believe this for all the time in corporate. Now that you've made me really think this, there were times I remember thinking, gosh, it would be fun to be an entrepreneur. Oh, I have nothing to sell. It would be
Yes,
great. Oh, I have nothing to sell.
most
And I
people are like that.
even when I left corporate, I was like, I'm a consultant. I'm not an entrepreneur.
Hmm.
And it took a lot of work on my own headset to go, wait a minute, that is not true. You are an entrepreneur. You do have value to put out in the world, and it's making a difference. And that step, I mean, you and I work with the same coach, right?
Yes.
We
Uh-huh.
all need that. It comes naturally to doubt ourselves, it comes
Right.
naturally to diminish. We don't see ourselves the way the rest of the world sees us.
Yeah.
And I know I need coaching on that monthly
I do.
because I
Me
forget it
too.
myself.
Yeah, it's like we take ourselves for granted. We take
Mhm.
our own knowledge for granted, and then we think everybody else seems like they have so much more. And Brandon
Yeah.
Straza, Brandon. I
Yeah.
mean, he had built a multi-million-dollar company in the insurance industry, but he did not look at himself as an entrepreneur. He
Yeah.
looked at himself as a business
Mhm.
owner. And when he
Mhm.
went to his first mastermind, he was like, "Oh my God, I don't belong here," and he had
Which is
like,
crazy.
yeah, and that was when he first started understanding, I am an entrepreneur, he had that mindset shift.
Yeah. Yep.
So, let's go back to you referred to it a little while ago about some of the simple things that somebody
Mhm.
can do to make their business more marketable or valuable. What are some of those
Yeah.
things?
So, really important things in the valuation is, are you a key element in that business? Does it require you to run? Does it
Mhm.
rely on well, I'm gonna talk about this 2 ways because one of the things is it require you to just to operate. Like in my particular case, right, I run a CFO business.
Yeah.
If when I go to sell this business, everything relies on a skill set that only I have,
Mhm.
the value of my business is gonna be nothing because I will be
Right.
a commodity bookkeeping and accounting service. But if I start now, I'm not selling my business
No,
yet,
I know.
but pretend I was thinking about selling it 7, 10 years down the road.
Mhm.
If I started now, well, I mean, and I am doing this not because of that, but for another reason, I need to start now training the me's. And nothing
Right.
I do is so special and magic that somebody can't be taught to do it. And so we're gonna build out more of people who understand the process I use to
Mhm.
do what we do for our clients, because underneath it all is a process. We call it the profit path. So,
Uh-huh.
and that's the same for every business owner, right? There's some standard process that happens. If you're the only one who can do it and you don't create and train an SOP, create operating procedures for others to do it, you
Yeah.
lose the value of your business. And it's very hard to do that because I believe for the first 3 years of my business, arrogant cuss that I was, nobody could do the piece I did. Only I
Yeah.
can do this.
Mhm.
And that is the biggest pile of bull ever. And
Yeah.
I couldn't get past it, Lisa, for the first 3 years.
It's very hard for most business owners.
Yeah. So we're just
Yeah.
starting now down that path. So that's one thing. Get yourself
Mhm.
out of the middle of it.
Yeah.
But that said, not just to sell your business, but it's so you can add more value to your business. Because
Yeah.
yes, you can do that thing. And yes, it's one of your strong spots, but your real strength is that you saw the need, you addressed the need, you created the thing to fill it.
Mhm.
And now you need to keep doing that because life changes all the time. We had COVID. So you need to be ready and free to be able to adapt to things like pandemics or economic
Mhm.
downturns or whatever the things might be. And getting yourself out of the middle of the day to day allows you to do
Be
that
able
too.
to work
Right.
above it instead
Right.
of in it. Not that
So just
you'll never work in it,
right.
but
Do what you want to do. Keep the number
yeah.
of clients you want
Mhm.
to keep and handle yourself.
Yeah.
So that's a big one is just start thinking about how.
Mhm.
Just think about it. How would I take myself out of the middle of this business? That's kind of thing number one. Second thing is get your books in order. Like
Yeah.
you got to have your books in order because here's what happens in a situation where a buyer comes in. They ask you for the financials, they take them, they do some standard analytics on them. If you get the right investment banker or somebody helping you sell your business, they'll, help you make sure of this. But they're going to look at things and they're going to ask questions. And if the first few questions they ask, you're able to provide the detail and answers to it fluidly, as if you know
Mhm.
exactly what's going on in your financials. All of a sudden, the negotiations get so much. You're in the position of power.
Yeah.
But a lot of times, what happens is an owner won't get prepared that way. The buyer will go, "Oh, what's going on here?" They'll poke, and and that'll fall apart. There won't be anything there because the books aren't solid. And
Mhm.
as a result, then you lose your negotiating power because they're able to say, hey, I can't trust the financials here. So I've got to look at your bank statements. That doesn't tell me enough information. So, I've got to bring in a pretty big risk premium discount to
Yeah.
my purchase price. So that's a big one
And
that's
if
very
some
easy to
if
do.
if anybody out there doesn't understand, if you're thinking, well, I don't really get it, just think about it if you're being audited and an
Yep.
auditor comes in and everything they ask you for checks out, then they're
So
gonna look less, they're gonna hunt less. But if they start seeing red flags and seeing like it looks like maybe you've made stuff up or whatever, then as you said, they're gonna poke more. They're gonna start
mhm.
digging because they're gonna feel like so it's kind of if that helps anybody
Yeah, that's a
understand, it's
great
kind of
way to
like
put it.
that.
Think about it in the house analogy again. If
Hmm.
they poke at the wall board and it's mushy and they poke a hole in
Yeah.
it, in some place, as opposed to it being solid and grounded and not
Hmm.
wet, then they're gonna be a lot easier on the rest of the inspection, but if the first thing they touch is moldy,
Yeah.
you're gonna have
Then
a
they're
big
gonna feel like they need to look everywhere for
right,
mold.
right,
Yeah.
exactly, and it
Yeah.
puts you at a disadvantage in your negotiation, so
For
that's
sure.
kind of the second big thing I would say,
Uh-huh.
and then literally there's a list depending on what industry you're in, what you wanna sell for, how big you are, what your business process is. There's a whole there are indexes of what
Yeah.
things are that help improve the valuation. Whether you're gonna very important who you're gonna sell to. Are
Yeah.
you selling to, what we call a strategic buyer, which is gonna take you and integrate you into some master plan they've got?
Hmm.
Or are you just selling to somebody else who wants to run it like you run it?
Yeah.
And depending on what kind of buyer it is, you would change some things maybe
Hmm.
differently than others.
Yeah. Yeah. And I work also with people who are interested in getting their business ready to sell. I
Mhm.
really like to work with people from the angle of adding value. And so
Great
and I
point.
work some with the expense side, but it's usually like how can they get rid of expenses by using web apps and technology and stuff like that. But I love to work with people in helping them create new revenue streams or recurring revenue or passive
Mhm.
revenue. So somebody may own a really small business that it's only them and they may feel like, oh my gosh, I need to retire in 3 years. I've not done any of this stuff, but there's still things that you can do that you can create that will give you at least something that you can
Yep.
sell.
Yep.
And I mean, you can even sell a Facebook group. People even buy
So true.
Facebook. Yeah. So, I mean, obviously, that's not going to be worth as much as, an entire business. But there are things that you can do piecemeal if you feel like if you don't have time or whatever, that you'll never be able to sell the whole thing. There are things that you can do piecemeal. But I love to stress to people don't just think about cutting costs. think about adding value. And I'm going to give you an example that I mentioned to you the other day, Pam. Company that somebody very close to me used to work for, and the owner, the family decided that they wanted to sell. And it was a great business. The employees were really happy, but they started slashing costs, and it destroyed morale. It destroyed the quality of the products that they were manufacturing. So they started losing customers. And so the business started going down. A lot of people quit, and they ended up not selling the business. And it was a husk of what it was before. And it took them like 10 years to get back where they were, and they still haven't sold it. So
Wow.
that's the thing. When you are preparing to sell, do it so that you can sell it, but do it in a way that's not destroying the business if you
Right.
can't. Because
Yeah,
if you
that's
can't,
exactly right.
you want to be able to still be running it profitably.
That is such a great point. And the other thing we do, quite honestly, Lisa, is we go through and we figure out, which expenses are a lot of times quite legally, quite ethically.
Hmm.
We run personal expenses through the business because they really are business expenses. They
Yeah,
just happen to be things that we pay for personally. But, our phone is 99% business, so it's a business expense, those kind of things.
right.
So, but we do identify those expenses and pull them out of the P&L because they're not expenses that necessarily some other buyer is going to do. They're going to have their own set of those to layer in. So we
Exactly.
pull ours out, they plug theirs in because 9 times out of 10, ours are in there as part of a tax strategy.
Hmm. Yeah, and a great example of that, a guy I was talking with last week was telling me about a client that he had worked with. They did a business valuation, and the value was something like, uh, I think it was like 800,000, and they didn't want to sell for several years. So we gave them advice, and one of the things was get all of these personal things out, even though they were legit, but stop running all the personal things through. They ended up selling for 2.1 million
Yeah. And you don't
because,
actually have to stop running them through it.
yeah,
You can actually continue to run the business the way you run the business, but when you present the financials to the buyer, you
yeah,
back out something called owner's discretionary.
okay, yeah,
And that's the
yeah.
easier way, because that way they don't now, if there's
And
and
he
if it's a
might that
legal
might have been what he was referring to, but it did. It made from 800,000 to 2 point something
easier,
million.
yeah.
And it mostly
And
was
people miss
because,
that step.
yes. So
It's like,
they need somebody like you to help them identify it because they don't know.
right,
Yeah.
right, yeah, and it's so much fun when you see the light bulbs go off for the entrepreneur and they say, "Wow, this $10 change gets me $300 in value. I'm in."
Yeah.
It's so much fun to see them realize that, a lot of people never make that migration from, "Oh, I make this much money from my business every year," to, "If I do go to exit, I get to all of a sudden accelerate everything I'd be making for the next 10 years and
Mhm.
take it all at once because I'm selling it to somebody else." And once that hits them and they realize that their income could give them a significant money to invest or start another
Yeah.
business it's like, wow, I didn't realize that. So it's a
Yeah.
real education on what is an exit.
I grew up in a small town, and I used to think it was so cute and sweet when I would see all these old people still working in their business, like a jeweler. And I mean, that he was like my mother's age and he worked till he was like 90. And I used to
Wow.
think that he did it because he loved it. Now, he may have, but most
That's such
elderly
an
people,
art. Yeah.
yeah, most older people who are still working in their business, they're doing it because they can't sell it.
Yeah.
They cannot afford to retire.
Yeah.
So, and there, most business owners have such a huge portion of their personal wealth tied up in the business in some way, that, or even if it's not actual value in their head, it's value,
Great.
and
Bingo.
they think there's value there and there isn't, and then they're all of a sudden they're like, oh my god, there's
Mhm.
no way I can live off of $800 a month social security or whatever,
Yeah.
and
Yeah,
so
that's the other thing that I think is so important when you're dealing with entrepreneurs as a financial person is for all of us, there's emotion in our business. It's
yeah,
not just always a dollar decision.
that's
There
right.
are things that matter to us more than money. And,
Mhm.
a lot of times we need to be sensitive to, The owner wants to sell and he wants all of his employees to stay employed, and they're willing to take the hit on valuation for that.
Right.
So
Yeah.
that's totally fine. That's not right or wrong or indifferent.
Mhm.
That's what they want. And I think they need to understand they own the ability to determine how much value they're going to take in love and care, how much they're going to take in money, how much they're going to take in time.
Yeah. For sure. And another thing for people to think about is there somebody in the business that you may be able to groom and bring in
Yeah.
and let them end up buying the business? There's an
So
apparel
true.
company, a men's apparel company, like an hour away from us. The company's over 100 years old, but that's the kind of business. It's really hard for people. It's retail. It's not
Yep.
manufacturing. That's the kind
Wow.
of business. It's really hard to sell now.
Hmm.
And but the owners identified this young man. He's like 18, 19. He'd started working there in high school. He loved it. He loved sales. He loved everything about it. And they recognized that.
Got it.
And so what happened is they mentored him and they worked with SBDC, the small business,
Very.
and they put together a succession plan so that they spent years training him, and so he was able to work within the business and be being paid, but they were grooming him and forming the business around him so that when they were ready to retire he was able to take it over and buy it. And
I
that's
love
a business that probably the type of business it would have been really hard to sell to an outsider just because of the way things are now. Everybody's afraid of, with
That's a
online
brilliant
sales.
approach, because in that particular situation too, it doesn't even mean that that employee would have to have the cash to buy it,
Exactly. Yes.
because they can get a loan and they can also do what's called an earn out. And
Yes.
basically what happens is they pay for it over time as the business makes money. And
Right.
um, I had a client who had inherited a business that way. He was pegged as the guy. It was a trucking company. The old owner pegged him as the guy to own it, run it, and he
Mhm.
structured a deal where for the next 5 years, the owner took some of the profits. Um, but he was paid the whole time, and he never had to put out a dollar to buy it.
Yeah.
But now it's his.
Yeah. Yeah. I love that. And
Yeah.
it enables legacy businesses to stay open. Being
Amen.
from a small town,
Yep.
I see how there's so many local businesses that are such a big part of people's lives when they're growing up and families' lives. Plus, local businesses are the ones that support the local sports teams and charities and everything.
Yep.
So, when a small business like that closes, it's like the whole community has lost something.
Yeah.
And even the people who don't live there anymore, they've lost that thread of connection that they had the common memories with other
Yep.
people. And so I have a huge passion for helping Main Street type
I
businesses stay
love that.
open. It's
I
just,
love that.
it's the heartbeat of America. Not to be, I mean, that's cheesy, but it's true.
I was gonna say it's known as a corny line, but it's
Mhm.
absolute truth. And
Yeah,
especially now, I think there's a resurgence in
yeah,
the recognition that that's how this works. It's small businesses making jobs for people,
hmm,
building places for people to go and buy the things they need locally. And happily, I think consumers are now really pushing back and buying local when they
yeah.
can, which I think is awesome.
Yes, definitely. And I think younger people, like when I was growing up, it was mostly local businesses. And then, of course, we went to shopping centers and malls and
Yep.
all that. And, we wanted the box macaroni and cheese. We didn't want that, same kind of thing. It's like, oh, I don't want the local
Minute
stuff.
rice for me. I'm the minute
Yeah.
rice girl.
Yeah. So, but then our kids, my kids grew up fast food, all the stuff we wanted growing up and we never got to have because,
Yep.
our parents were very frugal. And my kids were like, oh, I'm sick of eating this stuff. So that generation is kind of going back to the home cooking and the local
Farm to
buying.
table. Yep.
Yeah, when they're not buying online,
Right.
they love local businesses. So
Yep.
I love
Absolutely
that.
true.
Yeah. Well,
Uh,
Pam, tell everybody tell them how they can get your book, tell them how they can connect with you, and tell them how they can find out more about your fractional CFO, but
awesome.
also the
So
speaking
yeah,
as well.
the website very plainly is pamprior.com. It's what you see there next to my
Mhm.
name. And you can find me everywhere on social as Pam S. Prior. Pam S as in Sam Prior.
Okay.
And that will lead you to whatever your question might be. There's a speaking page. There's how to get my book. There's how to have a conversation. There's a lot of free tools. So, help yourself. Some of the stuff I talked about, Lisa, as the easy things to overcome these hurdles are available on a website called profitconcierge.com.
Okay, great.
And there you can get basically a download of some of these free tools.
Okay, cool. And get her book. And if you ever see her speaking anywhere, go, because Pam makes listening to somebody speak about accounting fun. Or if you have a group that wants to hire a speaker to come in, contact her and hire.
Thank you, Lisa, so much.
Yeah, thank you for coming. I've had so much fun talking, and I have to do this, or Jason's going to kill me. Boomer Cash Out and Disrupt Your Now, and Pam's book, My First CFO.
Awesome.
Thank you so much, Pam. I'll talk with you later. Bye,
Thank you.
everybody.
Take care.
Thanks. Bye.